Greetings, members one and all of the Salivation Nation. What is the one event that could cause gold to drop $100? We're going to explore that in this article here from Market Watch, an opinion piece. But before we do that, let's take a look at where gold and silver and platinum and palladium are right now. Gold took another pretty big expansion today. And as you know, yesterday's video I talked about, about the next pullback. And we could see that depending on what happens with the geopolitics. But, pullback of $100 means that gold would still be well above $1,300, which would take us back to a time not so long ago when it was at that period. It has really kind of taken off here, spiked up a bit here. And my feeling is it probably is a little bit unwarranted, but we'll kind of explore some of those reasons why. Now, gold is at $14.19 as of the recording of this video, up 1.36%. Silver is now solidly above $15.51, but obviously its movement is not nearly as much as gold is right now. Platinum is up $5 or 0.62% percentage change. Palladium is up $36. Look at that. $1,545. It's moving along pretty rapidly here. The only one that's losing right now is the winner of all the precious metals, and that is rhodium. But I think it's sort of independent of the metals here. So let's go back and take a look at this and see exactly what's going on as to why some of these prices are so high in the first place. And, there's other factors than these three here, but this is an opinion piece here saying there's recently been a big focus on gold's price moves. What happens next to the price of gold is more important. There's a potentially binary event ahead. So we can explore the issue with the help of two charts. And there's an annotated chart for SPDR Gold Shares Exchange Traded Fund. And let's see what if we can open this up. I'm not sure. The annotated chart of the weekly measures. And we can see that here. There's a resistance zone. But I kind of don't like to really dabble too much within these SPDR, the electronic markets here. But essentially, it kind of pulls back to the physical, which is what most of us are interested in. And gold is broken above the strong resistance showed in the daily chart, and that's kind of a bullish indicator. Gold trades around the clock. However, that is not the case with the gold ETF. The daily chart shows a gap open above the resistance zone, which is also highly bullish. So the move in gold occurred on good volume in both daily and weekly charts with ETFs, of course the futures as well. The weekly chart on gold shows a bottoming pattern. This is also bullish for gold. Relative strength index on both daily and weekly charts is overbought. This is bearish in the short term and indicates a pullback if the news flow stops being supportive. And so that's the thing to consider, And people are getting excited, but that could be short-lived because of what's mentioned in here. The weekly chart shows that for the long term, gold is still in the resistance zone. For gold to go to a new high, such as $2,000 an ounce, gold will have to decisively break the top band of the resistance zone shown on the weekly chart. And so we can see there's that resistance zone they're talking about. And I don't know what these numbers here to the right mean. I'm not as familiar with that. 131.98. How does that correlate? Is this means $1,400? $1,400 and just missing a zero there? I don't know. For short term, the top level band of resistance shown on the weekly chart is a potential target. So there's the three events that have led to gold's rally. And I think we can agree with those. The European Central Bank unexpectedly turned more dovish than the consensus. And the Federal Reserve followed the ECB with a dovish message of potential rate cuts. And Iran shut down an unmanned U.S. drone, creating a safe haven buying. But what about other indicators such as the bond yield curve and trade concerns? I think those have to be considered too. I would say 5 things that have led up to this rally. And now these three things may be what really sparked the more recent, but gold has been kind of trending upwards here for a while, just before this kind of big spike here. Nonetheless, here, the next big event is what is also talked about between the President Trump and President Xi at the G20 in Osaka, Japan on June 28th and 29th. If the two sides strike a good long-term deal, the probability is high for gold to fall as much as $100 an ounce in a short period. So this is where trade comes into play. If they can come up with a trade deal, and of course they won't come up with one then, there's no way these two leaders meeting together will be able to work out a great deal that was such a complicated thing that's involved pages and pages of particulars. They thought they were close before. The two sides have spoken positively about it in the past as far as the leaders, but it's got to be done in ink. And this is where the psychological level can come into play. If they come out of this meeting and, all rosy, well, it could drop, but then it could go back up again. On the other hand, the acrimony between the two sides drastically worsens, and Trump goes ahead with additional tariffs. The possibility of gold rising by as much as $200 an ounce over a period of a few days is not out of the question. And the author says there are three reasons for this. A breakdown in talks will put additional pressure on central banks to provide more monetary stimulus. Monetary stimulus is good for gold and scary for the dollar and all currencies, especially in the European Central Bank and the Federal Reserve. They could do QE4. A breakdown in talks will increase the probability of a recession. A recession will be friendly to gold, for sure. According to algorithms in the Aurora report, a big part of gold's rally has been a short squeeze. In a short squeeze, short sellers who previously bet on gold falling must buy the shares to cover their positions, exaggerating gold's move up. There are still lots of short sellers in gold. Further, new short positions are being established based on the overbought conditions. The conditions are ripe for another leg up in the short squeeze if there is good news for gold. Of note regarding gold stocks, it's important that gold stocks Newmont Gold Corp and Barrick Gold are breaking out are gold miner ETFs. So there's trading gold in ETFs or something that some people would consider doing. I'm more of a physical kind of holder of gold, but certainly nothing wrong with people want to play in those markets for quick gains or what have you. But nonetheless, there is that. And looking back here to gold, if we kind of take a look and let's take a look at its history over some time here. Let's take a look at it for the 30-day run of gold here. It's been quite an upwards trend here, and you can see that it was only in the last 4 or 5 days here it really kind of shot up here. So that's the thing that I think we have to really kind of take into consideration here when looking at this. It's been a relatively steady upwards climb until the last few days, and I think that may have been maybe some overreaction in the markets. But I do believe with the author of the article that, make no mistake, when they get together, Xi and Trump, and have a talk and it comes out rosy, we could see this pullback. And I believe they probably will be positive. Doesn't mean it's going to necessarily move towards a trade deal, but I do think it's going to be the game changer in the coming days. Because the Iranian tensions now have somewhat eased in terms of a hot war breaking out or some sort of aggressive military action, at least for the moment. Because as of today, more sanctions have been imposed by a new executive order by Trump, and it has been confirmed this cyber attack on Iranian military targets for missiles. So with those two things occurring, that could be the response. There may be more that could occur, possibly more cyber attacks and or maybe a military target that will involve zero casualties. We'll see how it plays out. But I think right now we'll just hold on and we'll see what will happen with a pullback. I think it's coming in some form or another. But I think these events coming up this week will certainly play a part in it, and we'll just keep our eyes open and see what happens. The next big thing will be the actual rate cut in July. When that actually happens, will the price be baked in at that point or not? That's going to be quite a question to see. I think if there's another geopolitical or some other domestic event that happens that could possibly piggyback upon that, well, we'll see the price move one way or the other. And that's the thing too, the good news coming from one source and bad news coming from another source could prove to be neutral for gold or moving in the other direction. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.